Hello, everybody, and welcome back to another Stockholm Tech Meetup. I'm your host, Tyler Crowley, and that music you were just listening to was The Comet is Coming, one of my favorite new tracks. You can ping me about it if you want to know more about it. Welcome, everybody, and we got a really fun Stockholm Tech Meetup this month because Bitcoin, as you probably have heard, is going crazy. It's in the last few weeks has gone from 10,000 now, almost hitting 60,000 yesterday. And a lot of people, and there's a whole, not just Bitcoin that's going crazy. There's these new things called NFTs that you probably haven't heard about that are also simultaneously going crazy, which is on the Ethereum system. And the whole space is getting really crazy hot. So I found some good folks to dive into this and some very cool startups that are doing some very cool, innovative stuff. We're going to have them on as well. And before we do that, let's jump right into the news. So first things first, we are live, and you can let your friends know how to join at live.stockholm.tech. And if you are there, if you come into the YouTube player, and then you can there's a live chat feature on the YouTube player. So if you leave comments on the YouTube player, I will be able to see them, which is very cool. But going through the deck here, we get what do we got? As usual, we go through the fundraisings. The startup raised 8 million SEK from Barhydt and Chalmers. That's great. This guy raised 17 million euro, which is great, from GP Bullhound. Awesome. North Mill Bank got 30 million. That's great. And this health tech company got 25 million SEK. And these guys were smart and got a girl involved in the game. And they just raised, what are they called? Luminar Ventures, going to that one, 2.5 million euro for that one. That's great. Billhop, which was one of the 3 pitching startups on this event, about a year and a half ago. So it was great to see them in the news, raising 40 million. Congrats to them. And Carl Pay's new startup, secretly very ominously called Nothing, but with some incredible investors, including Google Ventures and Casey Neistat and the CEO of Reddit, Steve, and Kevin, the CEO, co-founder of Twitch, and just a whole bunch of fantastic investors in that. And of course, it's another month. So of course, Peter at Northvolt raised another 236 million, as he seems to do every month. Good for him. He's now up to 3.5 billion euros. God bless him. He's doing probably the coolest, most important project on the planet at the moment. Check out Northvolt if you haven't already. And probably the biggest news for our ecosystem up in Sweden in the last several months is a new unicorn, which is Truecaller, joins the Unicorn Club. But it's not just unicorn. Later on, this was on Thursday or Friday last week. A few hours later, Cint joins the Unicorn Club. So Stockholm got 2 unicorns on the same day. That's number 12 and number 13, if I'm counting correctly. And we should have 1 or if not 2 more before the end of the year, taking us to 15 unicorns for Stockholm with just less than 1 million people. It's an unprecedented feat, and everyone should be quite happy about that as we continue to have a great year in 2021. And so it's no surprise to see this article a few days back. Goldman Sachs sees 200 billion opportunity for European tech unicorns. Yeah, well, no poop. As we just showed, we just had 2 last week in Stockholm. So it just coincidentally, the Goldman team's office moved from London to Stockholm, which not a bad move, perhaps. So it'd be interesting to see how that shakes out. But they're welcome to the party, of course. I'd be excited to see what they get into. Some other interesting news relative to our community and ecosystem is this big remote work thing that's going on globally. Kind of started in the Bay Area because people wanted to get out of the Bay Area, but now even Spotify, which is not really based in the Bay Area, they've got a huge, fantastic space in New York and in many cities, but a main office in Stockholm is now letting their employees work from wherever they want, even after the pandemic. So this is seemingly forever. And I should say, if you are one of those Spotify startups, you are welcome to come work with me here at my beautiful place in Thailand on the beach. I've got a completely off-grid place here with a chef and a masseuse and the whole deal, and gigabit Ethernet. So if you want to work in a tropical paradise, you can ping me directly, and that would be cool with me. And so next up on the news, speaking of Spotify, we got Daniel starts a new prize with KTH. Spotify CEO and co-founder Daniel Ek wants to pay tribute to entrepreneurs who are breaking new ground. Now he co-finances a new prize with KTH worth £500,000, which will be awarded every year. KTHers have played a major role in Spotify's development, he says. That's very cool of both KTH and Daniel to do this. It's just a beautiful way to give back and inspire the next generation to keep the party rolling. So kudos to everyone there. And another, as I said before, this is one of these crazy big trends that we're going to jump into. And that was that doorbell you heard was our special guest, Bill, which is going to join us in about 1 minute. And this is one of the big topics going around the web today, this NFTs. People are spending millions, as this headline says. People are spending millions on JPEGs, tweets, and other crypto collectibles. Mark Cuban sold a GIF for $81,000. Someone bought a JPEG for $650,000. Digital End Game sold for $1.5 million. What are NFTs? We'll get into that shortly. And then maybe the biggest story in the tech ecosystem this week is Facebook versus Australia. And this is a really interesting one that is going to take a while to play out. It's only the first inning. And in the first inning, Australia told Facebook that, you're going to have to start paying when your users put links to Australian media in Facebook. And Facebook said, yeah, I don't think so. See you later, bye. We simply won't allow anyone to put any links. How about that? And that was, the punch and the counterpunch in the first round. The tech press is applauding Facebook for this. And then the Australian press, of course, is very upset because now they're banned from Facebook and their traffic has dropped 20%. And it will be very interesting to see how this plays out. Just doing a quick Google search on this topic brings up countless articles with very different perspectives on this. Some very positive, some very against, pro and against. CNN says Facebook faces a global backlash over its bid to bully Australia, and then Canada to follow Australia to take on Facebook in payment for content. And then you have other ones saying that this is very predictable and actually a very good move. So the opinions are all over the place. But here's the interesting point that I think nobody seems to be making. If the Australian publishers and Canadian publishers want Facebook to start paying, for the content that the users put into Facebook, what about this? Everyone has seen this airplane video that's going around in the last 3 days, right, of this engine on fire. And here's the person who took the video from his seat in the airplane, this guy, Chris. He says, he put it on Twitter, I had a front row seat to the entire engine failure on United Flight 328. And kind of traumatized by the whole thing. And then the first response to his tweet is the BBC saying, hey, Chris, can we get permission to share this? And then tweet after tweet, response after reply is journalists asking for permission to share this. And then we find out somebody went through and looked all over the web at all the publishers who have done this. And coincidentally, the news organization down in Australia, who's asking Facebook to pay for people putting their content on Facebook, took this guy's video without asking, put it on their site without paying. You see what I'm saying? So why are these sites taking news off of Twitter and putting it on their sites without paying the creators? And then they've got the balls to ask Facebook to pay when users put it on there. It's kind of hypocritical, if you see what I'm saying. So, like I said, it's still the first inning. We'll see how that all shakes out. A kind of interesting judo move on behalf of Jack Dorsey in all of this. And then this went kind of under the radar, kind of quietly. Twitter's Jack Dorsey wants to build an app store for the social media algorithms, meaning currently what you see on Twitter is based on Twitter's algorithm, obviously, something they programmed. However, so now they're somewhat responsible for what you see and don't see. And people get very upset if, their stuff isn't being seen. So what if there was a marketplace and anyone couldn't create an algorithm, and you as a Twitter user could pick which algorithm you wanted to install? So you would have an influence and a choice over what you're seeing. Hence, geniusly, Twitter's no longer responsible or liable for what you're seeing or not seeing. It's a really brilliant move, I think, on Jack's part to propose this, and interesting that the media really didn't pick up on it. But we will see how that shakes out. So before we welcome Bill, I just want to say a huge thanks to our partners in this event who've been with us for some of them for now 8 years, EY most notably. EY, of course, is the big accounting firm, but they also love to help startups in all kinds of wonderful ways. EQT Ventures is the big, new, fantastic venture fund in the Nordics. And then you've got 3 Drops, which if you're looking for designer, 3 Drops is the one you want. I'll make a personal connection. Just message me. And Capole, Danske Bank, NASDAQ, Visa, Hunt Club, if you're looking for awesome talent in America, they will find it for you. Message me directly. I'll connect you directly. Ving is the big law firm everybody knows, but they also love to help startups. And if they're happy to work with it, they'll, make a special arrangement. They'll make it possible for you to have the best legal representation that all the big companies have. So with that, I want to welcome Bill. Bill, are you there?
Yes, I am.
Yes, you are. There you are. Yes. Here we are.
Hi, how's it going? Yeah.
Good to see you.
Good morning, everyone.
Yeah.
Good afternoon and good evening. I guess for you, it's evening now, right?
Now it's early morning. It's just past midnight here in Thailand. And for you, it's 9 a.m. And for most of the Europeans watching, it's about 6 p.m. So it's a truly international affair in this post-COVID world we find ourselves in.
Sure is.
How are you dealing with it?
It's easy to get a lot of work done.
Yeah.
Which I'm sure is a common thread here.
Yeah.
And sometimes I wish it wasn't so easy.
Yeah.
So it was easier to shut down and kind of get back to the life we all had before. But I feel like there's light now at the end of the tunnel, as we say, and I think that's going to be more likely the case in the coming weeks. And certainly, I feel like by this summer, we'll mostly be moving towards a sense of pre-COVID normalcy, and I feel good about that. But certainly, it's been great for getting work done.
Yeah.
And given the space that I work in, when there's a lot of work to get done, it's been good in that regard, I suppose. And my team has been able to put their heads down and grow a massive business in the meantime.
Well, tell us more. What exactly are you up to?
Sure. So I run a company called Abra. ABRA. Abra is a cryptocurrency wallet and banking platform. It allows consumers globally, customers in 100 countries, to buy, sell, trade cryptocurrencies. Also, we run a high yield interest account product that allows you to earn interest on crypto deposits as well as dollar deposits between 5 and 10% interest, depending upon what currency you're depositing. And we're launching a lending product in a couple of weeks that allows you to borrow against your cryptocurrency deposits. So for people who are making, for example, a lot of money in the crypto world that don't want to necessarily either pay taxes or don't want to sell, they can actually borrow short-term against their crypto holdings, maybe for a down payment on a house or to buy a car or pay for college, depending on where they are. And so it really is becoming a full crypto banking suite of products.
I was about to say, it's just starting to sound like a bank.
Yeah, for crypto, basically.
Yeah,
that's right.
Paying interest and loan type.
Yep. Yep.
And
So,
give
and
us
then,
how did you get to where you're at today? Because I remember when we met, you were starting Abra, and back
Mhm.
then it was quite different. But from what I understand, you still do
Well,
the what you started out doing, right?
yeah. So the market has really evolved a lot over the last, 5 years, right? And so the demand for different crypto products has morphed and changed significantly as there's been this kind of first generation of adopters that's matured, and then there's the second generation coming in, and everybody's got different wants and needs, right? So a lot of the current generation coming in, they want to buy and get exposure to Bitcoin, Ethereum. You mentioned now the NFTs, which is coming. The second generation, they have large holdings. They want to be able to borrow against the holdings. They want to be able to earn interest. They want to be able to store the funds in a secure way. And so that's really evolved to, basically push us into this really kind of diverse suite of crypto banking features.
Yeah, and I guess now with Bitcoin booming, as the price goes up, I imagine the volume is going up as well, and it's just driving a lot of traffic to things like
Yeah,
Abra.
the volume was going up before the price exploded because of our interest accounts and the ability to borrow, things like that. But then so like the slope of our business went up, like probably last summer, and then I would say in like November, December, it went up again.
Mm.
And so it's kind of vertical right now, and it's really crazy. And so today, like when there's a dip in the Bitcoin price and all the buyers just flock in,
Mm.
we know as soon as we see it, we know, oh my God, here it comes, right? And it's
Mm.
exactly what happened this morning.
Mm.
Like there was a big flock of buyers coming in to buy these dips, and it's great. I mean, it's just been very gratifying to see this whole kind of new crypto banking market emerge right in front of our eyes, right, in real time.
Where do you think? I mean, you spoke of how it's evolved. How do you think it will continue to evolve? Where do you see it going?
Yeah, I think there's a lot of things happening at once. So you ask a very simple question. I don't know if the answer is that simple. But
Deceptively simple, yes.
you asked, so I'm going to unpack it a little bit. All
Okay.
right, so there's a few things going on at the same time. There's the macroeconomic conditions, which worry me, right? The way we're printing dollars, bond markets are collapsing, the dollar is collapsing. It may stabilize short term, but you can't print 40% of the existing money supply into circulation in 12 months and not expect what you already had to be massively devalued. So that's happening at the same time that we're kind of in the end game of a long-term debt cycle. If you read Ray Dalio or others, they talk much better about this than I can, but effectively we're in the end game of that debt cycle. And the last time we were there, it didn't end very well. And so, it's war basically. And so bond markets collapsing is really bad for the planet. And so, on the other hand, we now have this boom in tech and other digital technologies, and Bitcoin is showing us that, hey, we can actually have a hard asset that the government can't manipulate by putting their finger on the print button all day. And so it's interesting that those two things happen to be happening at exactly the same time,
Right.
right? On the one hand, Bitcoin doesn't need the dollar to fail or the euro to fail in order to succeed, but it's going to happen. It's obviously not hurting the narrative at the same time. So I think what's going to happen, back to your question, is you're going to see this whole industry emerge around crypto banking that over a couple of decades is going to morph into traditional banking. And you're going to see Bitcoin become a standard part of banking collateral. You're going to see loans collateralized in cryptocurrencies. And a lot of consumers won't even have to understand what's going on in the background, just like they don't understand what a money market account is or a repo or the other aspects of banking today. But they will move to be crypto based over multiple decades, just like the internet has taken over every other aspect of our lives.
So the light bulb just went on for me as to why you're offering the features and products that you are, which is once they put it in the crypto universe, they can keep it there
That's
and
right.
do the add the banking features over there in crypto land so that it can stay
That's right.
there. Because
Right.
eventually,
And
once we all get there, we will stay there. But we're going to need those features, those banking features over there.
totally, totally. So I'll borrow dollars short term and do transactions ephemerally in dollars,
Got
maybe,
it.
and keep my assets in crypto because, one, they're actually going to be more stable because I know exactly how many of those assets there are, right? As opposed to the dollars we keep printing. And it makes more sense that way if I have to pay my taxes or whatever. We're very early. A lot of people will scoff at that idea, but it's already happening. It's just happening now with the millions of early adopters. And it's now moving on a kind of slow, methodical exponential growth path towards mainstream adoption.
Predictably exponential, yeah.
Right, predictably exponential, right? There's a phrase that here.
There is a chart I wish I had taken and shared my screen. Our mutual friend Mark Jeffrey showed it to me, where it's like it shows like this predictable something that was set out from the beginning, and then they map the where the price has been going over the last 10 years, and it is following it very predictably. Can you explain what that is?
It's a model called stock to flow, and so what it has to do is with the it has to do with the hardness of money. So the idea of stock to flow says that for any given asset type, let's say dollars or oil or gold or Bitcoin, how hard is that asset in terms of, is it easy to create more of it, right? Or is it provably scarce, for example? So in the case of gold, over time, it looks like we reproduce the supply of gold on the planet every 30 to 50 years. And gold is the hardest money we know because nothing is recreated at a slower rate than gold, with the exception now of Bitcoin. Bitcoin is now the hardest money ever known, and its new supply will actually go to zero soon, like in measurable time frame. And that's why it becomes the hardest asset ever known. And some very interesting bloke, I think based in the Netherlands, came up with a way of predicting price movements based upon this ever-changing, shrinking new supply model, which we call stock to flow, meaning for every given stock, what's the flow of the new supply. And as that supply approaches zero, the price should be skyrocketing. But the model has been uncannily accurate for years at predicting the price movements.
And the crazy thing about that is it's still it's accurate up until today. Where it goes from today shows this run that we're in goes up to 100,000, and then it levels off for a while, and then it goes up to 1 million per Bitcoin.
Right. And so now we're at an interesting juncture come like August, September of this year, because the model does predict that we get to 100,000. So if that happens, and I think we will, the model actually bifurcates into two different models, right? There's one model which predicts that there's a next phase, which comes very quickly. And then there's a second version of the model, which is what you talked about, which says we level off for a while. But the models both converge like 3 years out to Bitcoin at over 1 million. Right, which is, for people listening to this right now, they'll say, well, that's insane. But that's only 20x from where we are now, and we just went up 50x from 4 years ago. So I don't want to belabor just on price, but the model is basically saying we get there in one of two ways, but either way we get there.
Yeah.
And it's amazing, like I said, how accurate it's been. And I went back one other point.
In your mind, how do we justifiably get it to 1 million, and is that somehow related to why Tesla's in it, and does that play a role in this?
Of course, it's obvious. It's supply and demand, right? So when you have a what we call in economic terms a deflationary asset, which is the opposite of what government money is. Government money is an inflationary asset. It's basically theft from the middle class to the rich, right? Because that's effectively what an inflation does. A deflationary asset predictably should be hoarded over time as its value increases. And then once it reaches a certain threshold, in theory, the purse strings will be opened and people will start to spend it. And this is exactly what's happening now. Austrian economists wrote about this in the 1960s and 70s and predicted that if we ever had a non-government private money that was provably scarce, that exactly this would happen. Before the internet, they predicted that this is exactly what would happen if we had a kind of, they referred to it as private industry money, but regardless, they're effectively predicting what happens when you introduce something like Bitcoin, and it's playing out their rulebook to the letter, right? Cool. And it's just a question of supply and demand. All these people want it. Governments are going to want it eventually, but now we're talking about high net worth investors, certain institutions, Fortune 500 companies, and eventually small governments. And there's simply not enough to go around, and it's going to continue to drive the price up.
Yeah. What about Ethereum. If you could touch on that, how does that play into this?
Yeah, so Bitcoin and Ethereum are overlapping technologies that serve very different purposes, right? Bitcoin is going down the path of being a replacement for gold. Often you hear this phrase digital gold, but it's basically a better gold, no matter how you slice it up. It's a better store of value. It's provably scarce, it's very secure. Mining operations in Bitcoin secure the network so that old transactions, security goes up geometrically over time, et cetera, et cetera. Ethereum extends that idea into becoming what we call a global or world computer. And that enables all types of, in theory, all types of decentralized applications over time that integrate back into the physical world. Bitcoin doesn't know anything about the real world. It just knows about Bitcoin. So some examples of these things that integrate back into the physical world would be like a stablecoin. What is a stablecoin? A stablecoin allows you to have a cryptocurrency that represents a dollar or a euro or some other currency, right? And I have to store dollars in a bank account somewhere and then have a token that I can move around, right? Just like Bitcoin, but now a stable coin that represents those dollars or euros. That's one example. Another example would be, maybe you've heard this term DeFi, which stands for decentralized finance, which is basically a whole set of next generation banking services that simulates what trading houses and investment banks might do, but running on these kind of cryptocurrency oriented blockchains using Ethereum mostly. And they allow you to do things like create contracts for difference, other derivatives, lending services, and all kind of self-settling, in theory, with no off switch. We're not quite there yet, but that's the idea. Then you mentioned NFTs, non-fungible tokens, which is a fancy way of talking about things like collectibles or digital art or Pokemon cards or postage stamps, but purely in the digital realm. And again, tradable on an Ethereum network using the Ethereum blockchain, all in code, right? And so these are kind of applications of Ethereum that enable what we call decentralization in a way that is much more than just having a digital gold, Bitcoin. So they look and sound very similar, but they serve very different purposes, and they exist in different realms for different reasons. But I'm equally excited for different reasons about both.
What about the fairly recent news about the Chinese digital currency?
Yeah, so these so-called central bank digital currencies, very interesting. I mean, remember the kind of the cornerstone of what's happening with the dollar right now, or all major fiat currencies, right? We're witnessing kind of a global parallel collapse of all of these currencies because governments are just basically printing more money because they feel they have no choice in order to stabilize their economies. So there's no difference between printing paper money and creating a digital version of the same money if your finger is on the print button all day. I mean, the phrase that comes to mind in the US would be putting lipstick on a pig. It's still a pig. And so, there are some advantages to having that money in pure digital form in terms of being able to move it around. The first being that paper money is really disgusting. If you've ever analyzed what's actually on paper money, it's pretty nasty, right? I mean, it's got every disease known to man and all kinds of illicit drugs, components on there, even fecal matter. I mean, it's just gross. So I guess there's that. The problem is that the advantage of paper money as a bearer instrument is that it generally is considered more private. Because when you look at what China is trying to do, the digital money is effectively a bearer instrument, but they eliminate all of the tenets of privacy that go along with the paper version
right.
of the money. In other words, I'm going to track wherever you're moving the money.
Yeah, that seems more
do easily, right? Which is worse.
I was going to say that seems more in line with their traditional behaviors around surveillance.
Of course, it's a dream come true. It's a surveillance state. So you take the tenets of a bearer instrument, you explain to the public, oh, it's a better than paper money, right? And they just accept it because the technology is confusing. But really what they're doing is they're enabling tracking for everything you do that doesn't actually even require the banks to help them. It's built into the money itself now.
Right.
Which is crazy.
I wonder if they'll make their own government ad agency based on the data they collect from the...
Right. So nobody needs to be confused about this idea that the government will be able to make a better money once they just move to this crypto world. It's the opposite. I mean, I think they're going to leverage this to create a surveillance state that extends the nanny state. That's what I think.
That leads to one other interesting topic in this whole conversation, which is the self-sovereign identity conversation that I hear come up often. How does that relate?
Well, I mean, I don't even, it's hard to explain what that actually means, right? So self-sovereign, okay, that means I am who I am and I own myself. And identity, but what does identity mean, right? So identity is a really hard problem because proving you are who you say you are generally means you're trusting someone else. And at the same time, self-sovereign means is I own it. I own something that I trusted someone else to create, which is my ID card or my passport or my social security number in the US. And so we haven't really figured out what self-sovereign identity online is ultimately going to mean, because one, it's really complex. The goal of crypto at the end of the day is to eliminate centralized trust and create decentralized systems. But proving your identity, like I said, generally requires trust. And there's lots of smart people who spent way more time in this than I have that are trying to eliminate that trust and come up with ways like Reddit, right? If you make a post on Reddit and it gets upvoted, people like the post. In theory, you can have a similar thing which says, I say I'm Bill. And if enough people say, yeah, he's Bill, then in theory, you've established a trustless way of establishing that it's Bill. But that doesn't guarantee that all of those people were being duped into thinking that I'm Bill when I'm actually Frank, right? So we haven't really cracked the nut yet on how to establish a truly useful self-sovereign identity on the interwebs. And I hope we do. It's interesting. I hope people keep working on it, but it's a hard problem.
Yeah, it seems like a natural extension of the fact that countries primarily control your finances, your wealth is in their currency, and your identity is in their control as well in the form of a passport and ID cards. The first step was to get your financial and wealth. Both of these things belong to you, really, not the state. It's your wealth, and you exist without the state. Your wealth exists without the state. So you should be able to control those on a layer above and beyond the state. And clearly the financial part is underway. And it seems like the next wave will be getting your identity to somehow exist beyond the state. Although,
Yeah, that's the holy grail, as they say, and I think it's an open issue from a technology perspective, but that is definitely the holy grail of identity is to own it in a way that transcends any central trusted authority.
yeah. One last point before we dive into some other cool stuff. What is some people? A lot of when I was organizing this, I asked the audience like a conversation that they wanted to bring up, and being that a lot of our community is Swedes, they want to know about the climate impact of crypto, essentially, and blockchain mining and things like this.
Yeah, I mean it's a bit of a red herring, right? I mean the standard argument is oh it's really bad for it's bad for resource consumption. It uses crazy amounts of energy, and I have so many blog articles I can give. It's a really long. I mean everybody will be asleep by then, but I mean this has been thoroughly debunked, and it's just a red herring to me. It's an interesting discussion, I guess, for newbies, but the reality is once you dig in, it just doesn't. I mean, there's so much, if you look at where these places are in Iceland and the hydropower being used and places that have nuclear reactors being used and other, it's actually incredibly green in terms of where these mining facilities are, right? I mean, you don't want to put your mining facilities in California, right? It just doesn't make sense.
Right.
The cost would be prohibitive. The way energy is produced doesn't make sense. And so when you really dig in, if you just basically take the kilowatt hours and compare it to everything else, the numbers are very high and growing. Makes sense as to why, right? Because the amount of computing power they're using is significant. But when you actually look and dig into the details of where the Bitcoin mining takes place and why, I mean, it's mostly arbitraging existing electricity grids and tax advantages and access to capital and other things that don't actually create new stresses on grids that I've seen. So, I'm not going to say that's going to be true forever, but it's more or less been true since this business started exploding. And I have no reason to believe it's going to change anytime soon. So we'll see. But so far, I feel actually quite good about how the mining industry has evolved.
Cool. I have 4 startups, one of them from Iceland these are all crypto based. I would love you to get your feedback on them and have a dialogue about it. If you have I don't know how long it'll take to get through the 4 of them.
I'm good.
Okay.
Yeah.
I have an investor friend who's going to help us with that. Emmett, are you there?
Hey, Tyler.
Hey, how are you?
How's it going? I'm very good. How are you?
Good. Thanks. What is going on with J12? You guys seem to be having a good year.
Yeah, I think so. I mean, we launched the funds just over a year ago. I think Luca was on the stage with you pretty much 12 months ago. So, from that, we hit the ground running with a few investments. Obviously, then the pandemic happened, and that creates a lot of noise around things. But I think we rode through last year in a really good way. 8 investments then. Couple closed and soon to be announced in the last month or so. And I think we've, taken a bit of time in January to, settle down after the
holidays,
kind of 12 months and take stock, step back and, what's the next 12 months ahead? How do we want to build forwards? What are our goals going forward? So.
And what did you come up with?
Yeah, I mean, more of the same, if it's not broke. No, I think we're close to halfway invested in this fund. I mean, we look at, hopefully we'll make, somewhere around a similar number, 8 investments or so this year. But we talk a lot about, kind of, there's a Swedish term, mellanmjölk, and we talk about no mellanmjölk, which means essentially, no kind of middle grounds, no compromises, nothing by half. We want to double down on, increasingly making high conviction investments in areas that we have a strong belief in founders that we believe to be exceptional across a broad spectrum of sectors. And yeah, not do anything that looks like mellanmjölk, basically.
Yeah, Bill will have a good laugh when he finds out what mellanmjölk is when he Googles
I'm not sure how well it translates, but
it's quite a funny one for non-English speakers. And then I shared a news article. One of your partners was a founder of the latest unicorn, Stockholm's latest unicorn. Sint?
Exactly, Bo Madsen. We're very grateful and happy to be working with him. So yeah, as you said at the start, 2 new unicorns in Sweden, and Sint one of those. And I think what's even more important, when we see kind of billion-dollar companies created, is to recognize those that also reach kind of global category leader kind of status as well, to kind of be in a field and be the global category leader within it. And that often, coincides with reaching a valuation of that sort. So yeah, fantastic further flywheel of the ecosystem. And we're very happy that Bo is working with us as one of our partners.
Yeah. What has been maybe the biggest mistake you guys have made so far?
It's a good question. I think you've caught me there a little bit.
Yeah,
I think it's
an unscripted event, by the way. People don't know that. Nearly every event in Sweden is heavily scripted. This is not. So
yeah, which is highly appreciated. Spontaneity isn't something that you get very much.
It's a very un-Swedish question, by the way, because normally it's something people like to keep well hidden. I understand.
Yeah. No, I think, we from what we said that we would aim to do, So I'm going to try not to be too Swedish and diplomatic and dress up a response by not giving you an answer. But first, I will say, I think what we plan to do in terms of investment strategy, I think we've been fairly good on. Whether that is a mistake or not, sticking to a plan and not deviating enough from it, time will tell. I think what we are increasingly fine-tuning our understanding of is how we need to work with, leaving dry powder to support the companies in the portfolio that we really want to double down on going forward, and maintain conviction around that. I think it's very easy for a lot of investors. It's probably something that, within the subconscious of a relatively new fund, you have to do new investments. And as I said, we only do investments that we have high conviction around. But I think it's important that you have also the double perspective of how you are, working with the portfolio post-investment,
right,
as well. And I think that's more the part that we continue to learn a lot more around, as we go.
Good. Fair answer. We're going to have these 4 companies come up now. What catches your eye in a good way and in a bad way?
So in a good way, as I said, exceptional founders that are operating in large market opportunities where we see that what they are doing is very difficult to pull off from a product perspective, from an operations perspective. And where we get most excited is, if we can see that something is operating within the creation of a new market or in and around huge shifts within an existing market, then the opportunities to build an international category leader are multiple times more. If that's less the case, then we're excited when we're seeing a technical innovation that is 10 times over what is there today, delivers a much better experience for users, for customers, is technically superior. So new markets, big shifts, high product risk, those kind of things excite us a lot. On a general sense, in terms of areas that we look at it, I think we are a broad early stage fund, so to a large extent we are more opportunity driven than thesis driven. But I think there's a lot within data agility that we see that excites us, that involves around data ops, monitoring and validation of data, ML ops and collaboration for data science teams, increasingly kind of low code and no code solutions to enable kind of business personnel to work with data and tech in different ways. Healthcare is an area that is extremely exciting, given everything digital and remote health, everything preventive care, the shifts that hopefully we've seen both in consumer demand and public healthcare demand to see changes now as a result of the last 12 months. Remote work is obviously an interesting area, with the caveat that everybody is looking at it now. So I think competition is very fierce there, but there are obviously opportunities for a lot of players. And one area that I think is less kind of attractive to talk around in these forums, but has a lot of room for innovation and a lot is happening, is around logistics and supply chain. Everything driven by e-commerce that makes logistics go from being a B2B industry to basically a consumerized industry delivering to the door, has rippling effects all the way up the value chain there. And that tied in with everything going in around mobility, the need for greater transparency and ESG along the supply chain means that there's things happening there from all areas. So
cool, good answer. So let's go ahead and welcome our first startup there. There you are. Mobilio, are you there?
Yes, I am.
Cool. And thanks for joining us. I have your website over here somewhere. Let me pull that up. Everyone can get a look at this. Are you ready? 5 minutes on the clock?
I am, absolutely.
Okay, let's do it.
Awesome. So thanks for having me. So my core business is insurance telematics, which means that we support insurance companies in better understanding the behavioral risk of their customers and pricing them accordingly. So a couple of years ago, we found that actually scoring behavior and then actually discriminating customers by price is only the second best option. But the better option would be to actually remunerate positive behavior. So we started to analyze what actually is the biggest risk when you drive a car. And we found out that actually 26% of all accidents have a smartphone involved in some way. So distracted driving is by far the highest risk when you drive a car. We incorporated this in our model. So when you're an insurance company, you can actually use our software and bring it to the smartphones of your users and make them generate a score based on their driving behavior, which is basically driven by using your smartphone, by speeding, and by other behavioral events. So the point is, when you want people to change their behavior, it's not enough to actually tell them that they're doing something wrong, but you actually have to convince them with a reward or with something like to actually make them change their behavior. So we started with providing points for distraction-free minutes, and we started to onboard local partners for each and every insurance company. So we have many models out there where you can actually drive distraction-free, collect points, and then use these points, for example, at a gas station and get a free coffee because we partnered with that specific gas station. But we also found that this is going to be a little bit, let's say, stressy for us to find partners in every single geographic market. So we thought of some kind of bigger system where we can actually find some kind of currency which is accepted not only by one insurance company or by some local partners, but which can have, let's say, a broader acceptance. And this is why we came up with Mobilio. So Mobilio basically is an ERC20 token. So it runs on the Ethereum blockchain, and it is generated by distraction-free driving. So if you drive distraction-free, you collect 1 point for each distraction-free minute, and you will lose 1 point for each minute that you use your phone. And when you were driving and you finish your trip, you were able to exchange these points towards Mobilio token. So the Mobilio token is a smart contract, and it produces about 14 Mobilio per second. And our rationale behind this was that the more people join the network, the harder it will be for one person to get one Mobilio. So the exchange from points to distraction-free minutes will remain the same, but the exchange rate from points to Mobilio token will change over time. So why we came up with blockchain is because we needed the community to trust us. And the best way to trust is that you don't have to trust. And this is why I decided to go on chain and have everything totally crystal clear for every user. So what the stage we're currently in is that you're actually with the Mobilio app, you can produce points and use these points to mint the Mobilio token, which is a basic necessity for creating a currency. And we were discussing this before as I was listening to your conversations before when we were talking about assets. So we want Mobilio to become not an asset, but a real currency. And the currency means that a lot of people need to have it and a lot of people need to accept it. And it must be very easy to exchange it between the people. So we're now at the stage where you can create points, you can convert them to Mobilio token, and you can actually exchange Mobilio token with other market participants. And we already onboarded the first partners. So there is a marketplace already. It's only a couple of products, but where you can see where this goes. And we're currently working on larger corporations on accepting the Mobilio token. And the last thing I want to say is the beauty of a token over a point is that a point burns, but a token stays. And besides not being burned, but staying in the ecosystem, the beauty is that you don't have the problem of double spending. You don't have any security issues, and it becomes a much more attractive marketplace for everybody. So in an ideal world, many insurance companies will incorporate our SDK, as their users can then produce points, exchange them the Mobilio token, and insurance companies themselves and other market participants will accept that token as a means of payment, which is actually beautiful because insurance companies today are not able to remunerate you for changing your behavior. They can give you a discount, let's say at the end of the year, but they cannot say, hey, park your car in another spot because it's going to be hailing where it currently parked.
Got it. Cool. Bill, I'm curious to get your thoughts on this.
It's a pretty cool idea. I mean, I wonder, I guess my first reaction is how hard is it to explain all of that to the users, and how do you like get them in to get started without like having to explain all of what you're trying to do, like soup to nuts? Does that make sense?
Absolutely. So it's pretty easy. So when you look at our website, it's drive safe, get paid. So this is the basic concept. Actually onboarding is pretty easy. There are no strings attached. You don't even have to register. We create a wallet address for you. And you simply hop on board and we'll guide you through the process. So it's not that we tell you the whole story at the very beginning, but you get onboarded step by step. This is when you download the Mobilio.
Right. So what's the initial, if you're not explaining everything, like what's the initial hook then that you think is getting them to do the initial download and registration?
Well, there are different demographics. There are the ones who know of tokens and know of blockchain, and they're excited because there's an opportunity for them to mine or to mint a token without, let's say, buying expensive computer equipment. And the second is that people are interested in the claim by itself. So we have a lot of people who understand immediately what it's all about. And I can only ask you to download the app, and you will see that we talk you through with a very simple story. We explain to you why it's so important to not using your phone and why we're going to remunerate you.
Cool. Emmett, what went through your mind? What was going through your mind when you were watching this?
Yeah, I mean, I think there's a lot to happen in the insurance space, and it's interesting, as you say, to move things from pricing risk to pricing kind of behavior and move it to the behavioral side of things. To take the other side of the equation that Bill focused on there, the user side, when it comes to the insurance companies themselves, kind of how much can you communicate the measurable value that they can expect to gain from integrating this, and what does it take from them cost-wise, resource-wise to get up and running?
Sure. So the point is, as you know, insurance companies, they speak of, or they don't speak of EBIT margins, but they speak of combined ratio. What is the ratio between the premiums and their expenditure? So the average insurance company in the automotive space has a combined ratio of 95 to 98, or even above 100. That means that they spend 95 to above 100% of their income of car insurance on claims and costs. So automotive insurance is not a profitable business. So changing every percentage point in losses is a real gain for insurance companies. So already changing the combined ratio for 1 or 2 percentage point increases their profit by 30 to 40%. So this is totally understood by insurance companies. And as said before, distraction-free driving alone accounts for 26% of accidents. So there comes a lot of more technology that we provide. like predictive analytics. So we can understand, for example, when there's black ice on your trip tomorrow morning to work, and we can warn you. We can tell you when your car is parked in the wrong place where there's a lot of vandalism or theft. So there are a lot of other things we can incorporate, and the cost is very low. So our target price for insurance company is around €1 per customer per year.
It's really interesting. Like Bill said, it's fun to see some of these really outside the box ideas that people use this technology for. I felt the same way the first time I saw Abra. I think Bill won a huge event with one of the biggest events in America when he launched Abra, because the concept was so unique and original, and this is equally kind of unique and original in its own way. It'll be really interesting, and I think you're right. If the maths work out for everybody, for the insurance companies most notably, so that they do your distribution for you to the users, then you might have something. Yeah. Cool. So
at least we have a couple of 100,000 users already, so people seem to appreciate it.
Yeah. Well, if you're incentivizing them, it's a win-win-win for everybody. If the maths all work out, which it likely could. So definitely worth watching closely. Thanks for sharing that, Harold. And I'm trying to remember which is next. Josh is Packet is next, I think. Are you ready?
Yes, absolutely. Hey everyone, thanks for tuning in. So I'm going to tell you about a project called Packet, and I'm going to walk you through a deck real quick, and we'll kind of just jump through it. But
you can share your screen. Yeah.
Let me share.
Yeah.
Yep. And then
hit play on that.
Yeah, exactly. All right. So Packet is internet by the people for the people. The big idea is Airbnb or Uber allows you to monetize your car. Airbnb allows you to monetize your house, and Packet allows you to monetize your unused internet bandwidth. So Packet incentivizes people to become cloud ISPs, and this allows them to have low internet access around the world, low cost internet access around the world. Hold on, I need to get you guys are in the way. Sorry, give me 1 second. All right, there we go. All right, so basically Packet is an open source project that allows people to monetize their unused internet bandwidth and basically become a cloud ISP. Everyone has the internet at their house. They're paying for every month, and you're usually not using even a fraction of it. You want to have all that bandwidth available for when you do need it for your Netflix or for streaming video. But most of us are checking emails and doing things like that most of the time, and you don't actually need all that bandwidth. And by contributing bandwidth to the network, you become part of a global distributed network. Packet launched back in August 2019 and is currently in a main net. So Packet is leveraging an open source technology that was launched in 2011. And basically what this does is, what CJDNS does is it assigns a encrypted IPv6 address and basically allows you to become an ISP and be able to share your internet. And it was a cool idea. It got a few thousand people involved back in 2011, but there wasn't any incentive mechanism to be able to spin up these nodes. And so with the growth of Bitcoin and Lightning Network, it really enabled this project to be able to create the incentive mechanism to spin up nodes. So Packet Cash is a utility coin. It's minted every 60 seconds, making it 10 times faster than Bitcoin. Packet Cash can be used for VPN through Anode VPN. It can also be used through Packet Pal to be able to pay your utility bills and also to buy more mining hardware to be able to mint more coins. Every 100 days, there's what's called a decimation, and the total coin supply drops by 10%. And it'll take about 63 years to be able to mine the last block. And we've already seen in the last 3 months, month over month, the difficulty to mine has doubled. And bandwidth has a hard cost. So people are really excited about the project and throwing resources at the project, which then is decentralizing the internet and growing this network exponentially. So Caleb James Delisle is the founding lead dev of Packet, and he is the developer who created CJDNS. He's done a few other projects like CryptPad, and he is an early Bitcoin guy and with cryptography and a security analyst. So Packet uses a new proof of work, and it's the first bandwidth hard proof of work. What we did is we took Bitcoin's code base and we removed SHA-256 and replaced it with Packet Crypt. And this requires people to have bandwidth to be able to mine it. And by everybody proving that they have bandwidth, now we have this huge bandwidth resource that can be used for a lot of different cool projects. And one thing to point out that I missed in the previous slide is Packet is not owned by anybody. There's no central company, there's no CEO, there's no venture funds behind it. It is completely decentralized and similar to how Bitcoin was created. So 20% of every block that is mined is paid to the network steward. And this is really cool for developers out there who are watching. Basically, the network steward is required to fund projects to grow the network. And so anybody can submit a proposal to the network steward, and the network steward is 5 democratically elected wallet holders who have to spend the money. And every 90 days, if they don't spend the coins, then the coins are burned. And currently 275 million coins have been burned to date, which then removes it from the coin supply and increasing supply and demand. So another really interesting project that we are building and was a network steward proposal, here's an example, is Token Strike. And what Token Strike does is it allows people to spin up ERC20 like tokens and that don't have that are low fees and don't have the scalability challenges that Ethereum faces, obviously before the next phases of Ethereum that they're addressing. But this becomes kind of the ability to be able to tokenize bandwidth and to have microtransactions for bandwidth. But even though you'd be tokenizing bandwidth, you could tokenize literally anything. And a lot of these projects that are using Ethereum that are network-based or VPN-based, it makes a lot of sense for them to be able to leverage this blockchain, because by people mining it, they're actually enabling the mission that they say that they're after completing. Packet roadmap. Right now, people are mining it. That's kind of like been the first phase, is launching it and getting people excited. The next phase is creating a VPN marketplace, where an Anode is currently doing that, where you get a VPN for free and then you pay for speed and priority using Packet Cash. The next is internet sharing and becoming an edge point where you'll be able to actually share the internet with your community. And that's really been the focus of Packet Pal. Tokenized bandwidth, creating color coins for technology that represents bandwidth leases to the internet backhaul. That is what Token Strike does. And then that is what Anode will be leveraging to be able to buy and sell bandwidth. And then hardware support, creating antenna hardware that people can have onto their roofs and be able to provide the internet without having to tap in to the centralized internet virtually. So I touched on a couple of these projects. As I said, Packet is completely decentralized. There's no company behind it. But these are a couple of companies that we have started that that leverage the open source technology. Packet is on GitHub. It's completely open source, so anybody can download it, anyone can use it, anyone can leverage it. We've created Anode VPN, which allows you to which is creating the VPN marketplace, and then PacketPal is creating the hardware for people to be able to mine, and really creating a turnkey solution, plug and play mining ability, where anybody can mine from their home or office. My mom is literally, mining her internet bandwidth, and it's that simple to use. And so the also what we'll be enabling in Q2 is for you to be able to pay your bills using Packet. So you'll be able to mine Packet with your internet, and then you'll be able to use the coins that you mined to actually pay your internet bill, your Netflix bill, your utility bills, and stuff of that nature.
Cool.
And then here's the community. It's a growing community, and anybody can get involved.
Right on. Thank you, Josh. Cool. So I think
You're
Bill had to run. Emmett, what was going through your mind there? Other than
I'll assume the role of crypto expert now.
Sure.
That Bill has left us. No, I'm not sure I managed that. No, I mean it's very cool to see existing infrastructures becoming decentralized and different ways of interacting with them. I guess, I mean, first curiosity is around how you start to build volume on the marketplace to kind of establish some degree of liquidity. And you mentioned a little bit what it takes for somebody to get started and start mining, but just in terms of a go-to market and kind of
it's a great question.
onboarding process.
Yeah, absolutely. So we've created a very plug and play, easy for people to get involved. We look at it as a lot of people's first access points to cryptocurrency. And a lot of the marketing and communications around it, we're actually not even using buzzwords like blockchain and cryptocurrency, because you use those words and people's eyes just automatically gloss over. Really steering it so that you have this cost that we've always looked at our internet as a cost, and now you can turn that into a profit center, and you can use those coins to be able to pay your bills. Currently, the coin is being traded in an OTC private chat, and the coin value has basically 10x'd in the last month, and it's looking to do that again. The difficulty increasing and it being harder to obtain these coins, it's just the cost to mine grows and the value of the coin grows because it's literally backed by the cost of bandwidth. So that's happening right now. Currently, since it's a decentralized project, we have multiple community members that are in touch with exchanges, anywhere from the biggest centralized exchanges down to DeFi solutions. And that should be happening over the next 60 days to be able to create that liquidity. And so I think that's also why we've seen the community grow exponentially right now. Is it's kind of an arms race to get as many coins before the listing happens, so that everyone can kind of position themselves, right. Because the difficulty will grow as the marketing increases, which then will grow the value of the coin.
Got it. So there's this interesting dynamic with you and the people who are the super early users, which is you're trying to get on Coinbase essentially, and they have limited capacity of some sort, or at least bandwidth of attention anyways, right? And
we're talking to some of the biggest. I won't drop their names until it's an ink deal, but yeah, I mean, by the time you go to these centralized exchanges, they're basically marketing engines,
right? And
it's going to go expand it into a greater network of people, which as more people participate, the more people that are in the pool, the harder it is to obtain the coins.
Right.
And so you'll be getting less coins for the amount of energy or the amount of bandwidth that you're providing to the network. And so it's kind of like an arms race, and which kind of the whole point of it is creating this incentive mechanism where, it doesn't necessarily make sense for Verizon to come down to Cambodia to go and build infrastructure in the middle of nowhere, but if there is somebody from Cambodia that sees this economic incentive to go and create bandwidth there and to run fiber and be able to provide connectivity for a neighborhood. Now that incentive mechanism is there, and it does now make sense to go and do that. A lot of Bitcoin miners, for example, they use a lot of power, but have bandwidth pipes coming in there, but they're not using even a fraction of it. And so this becomes an opportunity to maximize all of it. It's interesting. I get one of our people that are mining sent me this article that Tesla has just announced that their next kind of pioneer is to have your rooftop solar mining Bitcoin and making your roof a powerhouse or a power center. And so the same thing is, yeah, you should be mining Bitcoin with your solar energy, and you should be mining Packet with your bandwidth that you have excess of.
So it's attaching value to bandwidth, and by doing that, it increases the financial incentive to lay out infrastructure, essentially, like your example in Cambodia.
Absolutely. I mean, we've always looked at bandwidth as a hard cost, and even if you're cutting your bills, you're not cutting your internet, because we literally can't live without it. And now, similar to how Airbnb, and that's why I use that example, is it was a crazy shift for someone to think like my car, that is a hard cost and a depreciating cost, could now make me money. And that's exactly what we've created here, is your bandwidth that is literally, you can't just store it in a box. Like, you either have to use it or it's gone. And if you're not using it, then it's gone. And so this makes it so that you can actually turn that into a profit center for your family, creating basically a minimum basic income for people, passive income that's coming out of this resource that you're paying for anyways.
Very interesting.
Are there any network security or privacy benefits or risks from kind of disintermediating in this way?
Yeah, I mean, the benefits are exponential. What CJDNS does, and I didn't go deep into the tech of it, is it's basically creating an end-to-end encrypted network. And so by mining Packet, you're actually routing the internet through an encrypted network, and you're building an end-to-end encrypted network that's also point-to-point. And so similar to how Signal is end-to-end encrypted, this network is also end-to-end encrypted. So that deals with privacy, security, and being able to route packets faster than your current internet. And as we get to scale, you're going to be able to see that this will actually route the internet faster and make it more efficient.
Very cool.
Cool.
Thanks for sharing that.
Basically, mesh networking at the edge.
Yeah. And with adding the secret sauce, which is the financial incentives to make the flywheel start to spin. Yeah.
Totally.
Very cool. Thank you for sharing that, Josh.
Anyone can learn more at packetpal.com. You can actually go and buy a miner or get involved. Or go to pkt.cash, and you can literally download it from GitHub and install it on your computer totally free.
One little tip, I think, and maybe if I can help you here in Thailand, which was just ranked as having the fastest and most speedtest.net categorizes which countries, they have a lot of analytics around the results of the speed tests based on geography. It turns out Thailand has the fastest internet in the world now because it's got fiber everywhere, but people aren't using it to its full, potential, so they could start monetizing it. So it's really interesting, because here getting an extra $1 a day is actually quite meaningful compared to with
absolutely
Europe. Yeah. Very interesting.
Sounds like you should set up some infrastructure out there. Start mining some packets.
Maybe that's why you're pitching today. Thanks, Josh. Alexander.
Everything happens for a reason.
Yeah. Pleasure, man. Alexander, show us Chili's.
Hi, Tyler. Thanks for the invitation.
Yeah.
Okay. Thank you for being here today. So let me introduce myself. I have 5 minutes to, I guess if it's like an elevator pitch.
Right. It's a long elevator pitch. That's right.
It's a very long elevator pitch. Actually, I need much less than 5 minutes. But long story short, I'm French with this accent. Don't blame me. Based in Malta.
No, I blame your parents. I don't blame you.
Based in Malta, where it's night, but it's a nice weather, when there is a significant Swede community, as you can imagine, because of the gaming industry. And actually, I was from the gaming industry before. Long story short, I've been in the internet space for 25 years, actually 26, in 1995. Created different internet companies. Most of them exited. My last venture was in the online gambling, obviously, sold in 2012 to a listed US group called Scientific Games, or at that time was Bali Technology. Spend a bit of that money into different ventures, and my last baby is called Socios.com, or Chili's. We have both names, but Socios.com has one mission, which is not to change the world, by the way. I'm not here to disrupt the financial industry at all. We have one mission, is to engage and monetize the sports and the entertainment space. What does it mean? In the football space, soccer when we talk to US, but today we are between Europeans, so let's talk about football. In the football space, 99.9% of the sports fans are not in the stadium. And I'm talking pre-COVID, not even talking today. And the idea was, what can you create that can engage and monetize fans of all of these big sports teams in the world? And we created a stupid, naive, and crazy idea called Fan Token, which is a way to recognize and empower the fans. Because at the end, what we looked at is that fans, they dream of two things. One, being recognized. Wow, I'm in Thailand, I'm a fan of Barcelona, and you are telling me that I'm recognized even though I don't live in Barcelona. That's number one. And number two, to have a voice, to have, I like to call that a share of influence instead of a share of a company. And what we did is we created this share of influence platform called Socios, which in Spanish means member, partner, associate. And if you're a fan of Real Madrid and Barcelona, the members of Real Madrid and Barcelona are called Socios. And we partner with, actually, let me share my screen so I can brag a little bit for 2 minutes. This one. No, I want to share Chrome. So that's a red day, so not bragging about that, but gonna show socios.com. So we partner with 20 plus teams for the time being, including Paris Saint-Germain, Juventus, Barcelona, AC Milan. Today we announced Legia in Poland, and many other teams, UFC and esports, etc. Actually, we have a Swedish team, I think it's called Alliance. What we do with these guys is you have an app, you can download it, it's free, socios.com, and you can buy fan tokens that give you a right to vote on decision of the club. So we partner with all of these massive teams, and you as a fan, anywhere in the world, suddenly you can have a voice. What does it mean? It means that, for example, Juventus, they ask their fans, what music do you want to have every time we score in the stadium? Because for the last 8 years, it was the same music. So they, instead of asking on Twitter, which is valueless and trolls and bots and fake accounts and whatever, they asked fans who had a vested interest. And the fan who had a vested interest are, of course, the fan token holders. So only the people who had Juventus token were able to vote on chain into the platforms. And that shows the music. Luckily enough, it was 1 year ago now, Ronaldo scored 3 times. So everybody in the stadium heard the music 3 times in a row, and they understood very well that the music was changed thanks to that. I mean, that's an example, but we've done that with all the clubs. Barcelona asked recently the design in the dressing room. Paris Saint-Germain asked their fans the design of the stadium. Everything that is not sports related can actually be asked to the fans. But the best way to engage their fan is to actually have a vested interest and to monetize this. So we created this ecosystem of all of these fan tokens, which are on the blockchain, on our blockchain actually, called Chili's chain. And now we have more or less, today is a very bad day if you looked at the Bitcoin, but we created a $150 million market cap right now with more or less 20 teams. The biggest one is, of course, Barcelona right now with $26 million of market cap. There is $22 million per day traded. So I'm burning some steps. Every fan tokens that we are creating become digital assets. They are not NFTs. They are fungible tokens. NFTs is a different need from the different, let's say, vision. But what we do is, at least in our eyes, much more scalable. It's mainstream. It's global, and we allow any fans in the world to own this, but we allow them also to trade. And not only originally they trade that in our platform, so socios.com, and also chilis.net, which is like the hardcore exchange if you're a hardcore trader. But since 2 months now, exactly 2 months, It's also available on Binance.com. We have 5 teams that are on Binance.com. We have 6 or 7 teams that are in Turkey, in Korea, in Brazil. So we managed to create an ecosystem that right now is 150 million. Our goal is to make it's to to capture, let's say, $1 billion market cap by the end of the year for all of these tokens. And obviously this is slightly limitless because right now we have 20 teams, but tomorrow we are, I hope it's recorded, but tomorrow we're announcing another one. We're announcing a couple of other ones in this week actually, etc., etc. And yeah, our job is going to be to have like 50 to 100 teams very soon in different sports. We have soccer, we have football, we have esports, we have UFC, PFL. We're going to have cricket. We're going to announce some baseball teams, and of course, North American teams soon. So that's more or less what we are doing.
Got it.
Works pretty well. And again, this is for us the next generation of fan engagement. We believe that engagement should go through monetization. And it's not about payments. Usually people think about crypto equal payments. No, we disagree totally. We think about crypto is rather about assets. And here we created a share of influence that we tokenize. And me as a fan, let's say this is a Juventus token, a real one. Me as a fan, I own that token. And as long as I own that token, I can participate, I can be listened, I can have, of course, I have discount, merchandising, and many other things. So that's more or less what we are doing.
Very cool. It seems to be working. Cool. Emmett, what do you think?
I'm a big football fan, so I think stuff that is working with fan engagement and taking the way clubs work to a new level is very cool to hear about and understand. I guess some of the questions. Just looking there at the market caps that you had, I was curious. How do you see the market caps that you have on your platform relating to the actual valuation of clubs over time? Kind of what relationship do you envision that you can reach to, or how?
I will split, for example, in the teams I'm looking at the team. Juventus is a listed company, Roma is a listed company, Galatasaray is a listed company. All of these teams, they have a market cap. Juventus is what, I don't know, 1.6 billion, something like that. AS Roma is like 400-500 million. The market cap of what we are doing, not that I don't wish it's going to go to $1 billion for these teams, but I don't think we should compare to the real shares and the real value of the company, because that's not the point. The way we envision what we are trying to build is to translate and to monetize the fan sentiment towards the teams that they are supporting. So right now, the market cap of Barcelona is $26 million. But actually, it's not the market cap, it's the circulating supply. Fully diluted, if you think about, because that's the floating, let's say. But fully diluted, we still have like 80% of the tokens we haven't sold. And the goal is to sell that in the next 5 to 7 years. So if the price was to stay where it is today, actually the market cap will be $300 or $400 million easily for most of these teams in the next, let's say, 7 years. I don't know what will happen, obviously, but our vision is we believe that fans should not be exposed to the ROI of teams. We don't believe that fans should actually own shares of teams, because that's not most of the teams lose money and are designed to lose money, because they exist to create value, and they exist to satisfy mainly egos of people involved in that space. Now, if you translate that to the fans, we believe that creating an alternative layer, an alternative market where the fans can trade the influence they have in these teams, it's much more valuable than having the right to vote on the board or the annual accounts of the teams once a year. And that's what we're trying to build. It's going to take time. It's already taking a lot of time, of course, and it's all about education and evangelization, but it's getting there.
I mean, it seems that you've been pretty successful with the clubs that you named there, but I was curious, like what does that process look like to educate the clubs and actually sell in this pretty new way of doing things to a Barcelona or a Juventus?
So what I recently said on LinkedIn is, the bad thing of the sports industry is everything is about money, but the good thing about the sports industry is everything is about money. And we were very lucky. We raised like $60 million, 60 in 2018 through like a private ICO, whatever mechanism we did. And that gave us incredible cash opportunity to actually force clubs to engage with us because we became like, we gave some minimum guarantee to these clubs, and that kind of forced them to at least listen to us. Now it pivoted because we have clubs reaching out to us because in 2020 we generated like $34 million revenue in our first year actually. This year we'll do more, hopefully. But it means that most of this revenue, I'm not going to share the amount, but most of the revenue went to the clubs. So there is some clubs we gave away like $5 million in a COVID-19 year. So we are suddenly creating a new revenue stream that is completely different from whatever they are doing. And with one very important, I will say, highlight is sports club or sports team in general don't own their fan. And they cannot reach 100% of a very fragmented fan base. You are a fan in Sweden, you will probably never go to Camp Nou, or you've been once for Barcelona, and that's great. But what can I do? What can I sell you that was $200 per year for you or $50 per year for you to engage? That makes sense. And we believe that what we do is one answer. It's not the answer, it's one answer. And what we are doing is educating clubs about the fact that, hey guys, you will never reach 100% of your fan and you will never monetize yourself 100% of your fan base. So you need to have different products for different audiences. And we are targeting the more young /geeky crypto enthusiasts today. But this is already 100 million people. And in the next 2 years, it's 200, 300 million. And that's what we're targeting.
Oh, cool.
Interesting. Thank you for sharing that, Alexander. It's clearly you seem to be onto something. It seems like the teams are at least receptive to experimenting, and as long as the momentum continues to go in the right directions, it looks like you'll have a bright future.
Hopefully, spending a lot of money for that.
Yeah, I hope so. Cool.
Thanks a lot.
Cool. Thank you again. Gisli, are you there?
I'm here.
Monerium. So what is Monerium?
Monerium is a e-money company. I'll get to that. So we are based up here in Iceland. I'm actually coming in live from one of the smaller fishery towns here up north. I'm here with the family skiing. So you can see the trawlers here. This is actually one of the...
Yeah, but you know, everything can be faked now, so I don't know if that's really true.
Exactly. But this is one of the places where Bill was mentioning some of the Bitcoins being mined. They're not currently in Siglufjörður, but close to it.
Right?
Yeah.
It's true, right? That's becoming quite a cottage industry there, is it not?
Yeah. At one point, Iceland represented about 1/10 of the mining capacity of the Bitcoin network.
Wow.
It's less now, but it's due to the fact that it's been growing exponentially in other places and remained relatively the same here.
Is it because the combination of geothermal plus the cold, it keeps the machines cold, plus the geothermal energy, and it's just a beautiful combination.
You got it. This is probably the single industry that benefits from both, the geothermal thing and the constant cold here. So, but you have, a lot of these.
You're the new Dubai.
Yeah, exactly. Yeah. So I just wanted. I'm honored to be here with you guys. I just wanted to give a short shout out to Bill and Abra, even though he's left. He's a true pioneer in the industry, and I've been following him for many years, and would have loved to engage with him as well.
I'll make sure you connect. Yeah, he had to jump to something, but I'll make sure you connect.
No worries. Happy to discuss, with everyone who is interested in the topic.
Yeah.
So, do you want me to get to it?
Please do.
Okay, so I'm going to share my screen. I'm on an iPad here on a hotel. I hope this goes well. May the demo gods be with me. So you should be seeing my screen right about now. Can you see it?
Yeah, it looks good.
Yep.
Okay, perfect. So Monerium, we're all about money and on blockchains. And what we've been saying is that you don't need a bank, you just need money. It's about identifying the single Lego cubes that sort of, make up the financial system, and then unbundling them from the current legacy system and rebuilding them again. And so what we've been saying for a number of years now, and what is becoming painfully obvious, is that all assets will be tokenized and transacted online. Case in point, just the other companies here presenting, be it insurance, fan engagement, it's all going to be there. Royalties, major markets, FX, bonds, everything is going to be on there. And it's not going to be because, users want to transact on a blockchain. It's about the qualities of, what happens when you bring things and tokenize things and bring them online onto a blockchain. And the other thing is that money belongs on blockchains as well. So fiat currency, the regular currency that we all use, is the asset that all other assets trade against. And this was our insight from back in the day that, blockchains will probably revolutionize a lot of the industries, but you're not necessarily going to be using Bitcoin to pay for your mortgage or something else. Well, maybe that's a bad example because it's happening, but the fiat is currently, the single asset that everything else trades against. And when you have a network that's decentralized, it's global, it's, you have internet-like qualities, it just opens up possibilities that you didn't have before. So you can start to stream money, you can start to do a number of things. And when you have money and the assets on the same ledger, you can start to do real programmable delivery versus payment. And this is huge because, most people don't realize how assets and value is settled today. And I'm just kind of amazed of the ingenuity of the humankind, with the technology that we have today, that we're able to achieve the things that we are currently doing. But with this technology, everything will be much, much easier. One point in case is DeFi, and that stands for decentralized finance. And here's just a short slide on the main metric that is used in that industry. It's the total value locked. And it basically was zero for the longest time. But last summer, you started seeing it growing, and it's been growing exponentially since, and it's just hit 40 billion just earlier this month. But the real problem is that you have DeFi, you have the collectibles, the NFTs, you have all of this. You've seen the innovation that is happening. Basically, more innovation in these markets, in the past few years than you've had in the past decades. But the real problem is that these mainstream markets aren't connected to blockchains. And that's basically where we come in. I mean, these are huge markets. These are mainstream markets, and they will enter and connect with the markets that, Bill was discussing earlier. And there are a number of things that need to be worked on. A lot of this needs to be abstracted away, the peculiarities around wallets. But the other thing is that you need to be able to move value seamlessly back and forth, and it needs to, just blend in the background for the user. And so that's where we come in. We are essentially the bridge between the current legacy system of banks and blockchains. So you can start to send money directly between bank accounts and your blockchain wallet, and you won't even notice that you're doing it. And on a blockchain, we maintain that the money is more secure than it is in your bank. And what it just really wanted to do is just to show you a small demonstration here of what I'm talking about. So I'm going to show you here. Can you see this YouTube video here?
Yeah.
Okay, perfect. So this is essentially a client that we built on top of a blockchain. It is going to show your euro holdings on a blockchain. You're connected through a MetaMask wallet, which is the standard for Ethereum. And what we have essentially done is that we issue IBAN addresses for our customers. So they can, they don't necessarily need to know that this is blockchain. They can just give it out to their friends or their business partners and start to collect money from the SEPA system instantly. So here's how it goes.
We can see.
Okay, so this is the wallet, and you can see in the wallet that you have €0 in there. You copy the IBAN address of your account that's being provisioned by Monerium, and you go to your online bank account. You paste in the address, you type in the amount, and you confirm the bank transfer. We are connected to Instant SEPA, so we can deliver this within 10 seconds, and then a little more for the blockchain to update. And there you go. You can see that both the app and your wallet agree on your euro position. Okay, so this was just a short demonstration of how we connect the blockchains to the legacy system, and which we think is sort of a prelude for the mainstream to come. What you can start to do with this, once you have the money represented on chain, you can either initiate a payment back to the old legacy system, and you can route that through smart contracts where you could have sort of a fan out payment or conditional payment or whatever you want. You can start to program into those payment flows. But once the money is on chain, you can also start to participate in all the cool stuff that is being built on there. So I'm just going to show you here. This is an example how we connected our tokens to Uniswap, which is essentially a way for users to exchange an asset for another without any intermediaries. So these are just smart contracts holding the fund, calculating everything. And we show here how you can use these tools to exchange from a euro to a pound. So here we go. Play. So you have
to complete the issuance.
Okay, so you have €100 in your wallet now, which you may have gotten through the SEPA account or the IBAN account, and now you go to Uniswap. This is an unrelated project, and you connect your wallet to Uniswap, and what Uniswap is able to do then, they can start to see your assets. So here we're connecting the tokens that we issue, and Uniswap can see that you have €100. So you want to swap them for pounds. And remember, there's no bank in there, there's no intermediary, it's just a smart contract holding these currencies, and they give you an estimation of the rate between the two currencies. So for €100 you get 90.7 pounds. You approve the program you authorize it to swap these assets on your behalf. You wait for the confirmation, and you're all done. Now that you have swapped €100 permissionlessly for 90.729 pounds, and that's how we help DeFi come to mainstream. So I'm just going to stop here now. Just a little bit about I'm just going to try to stop this. Go back in here. So just a little bit about Monerium. We are actually the first authorized issuer of e-money. E-money is supposed to be a technology neutral cash, and we have the first license on a blockchain. We are authorized in all EU member states, plus Iceland, Liechtenstein, Norway, and the UK. We provide instant transfers between bank accounts and blockchain wallets. We have a business model that is insulated from negative interest rates in euros. We currently support the euro, pound, the dollar, and of course the Icelandic krona, but we can issue any other currency that we want. We spent 2 years becoming this e-money institution. We are blockchain agnostic. We have already issued on Ethereum and Algorand. So we believe in a multi-chain world where all of them will eventually be interconnected, and we are going to, be on all of them. We have a strong team backed by experienced investors, and we're just about to scale. We're launching in March. So we're really excited to have the opportunity to present here. So that's sort of what I wanted to say. And is there anything that you would like to know?
I like the example you give, which is an interesting competitive threat to TransferWise, obviously, but what is, I'm curious how the rates compare with TransferWise in that example, but of course your example is one of many that you could have given. I wonder what's your second and third favorite use cases?
So what we have essentially been doing exactly is partnering up with many of the industry leaders. One example is Tradeshift, who's now become a unicorn all by themselves. They're sort of going into the supply chain, and a big sort of opportunity that we've seen there is what we've coined to be deep tier financing. So what that essentially allows us to do is to have the invoices themselves represent the flow of future money, sort of program the pipelines for the money to flow.
Yeah.
And you can install these pipelines, virtual pipelines, of course.
Yeah.
And once the money starts flowing, it just trickles all the way down to the correct partners. So I think that's a really interesting use case that we'll see in the near future. So that's one other example, but there's just myriad of others.
Right.
And we are essentially just riding the wave of builders. We're mainly doing this for the builders because users won't care about blockchains at all.
Right.
But builders suddenly have the tools to do what they wanted to do without sort of asking permission, without partnering with Visa or doing anything else. You just go right away.
It's a little bit of a stretch of a comparison, but it's sort of like Stripe for the modern money.
Yes, we actually sometimes internally use that comparison. But so we think Stripe is a wonderful company.
For fiat.
For fiat, yes. And for the old world. I mean, they're essentially right.
By the way, I know at least one of them are watching tonight. There's always a friend
fantastic.
of mine.
No, I mean, thanks for the heads up. I wasn't going to say anything bad about them. But what they have essentially done is sort of optimize the flow using the legacy system of credit card payments.
Yeah.
But I think, this is the whole narrative of how value is settled. People don't realize this in sort of in the back scenes, how actually money moves from A to B. We as consumers, we're so spoiled. We use Apple Pay. We think, everything is settled right now. But in fact, most of the companies are getting their money in days, weeks, or even months from the payment when the payment was authorized.
Yeah, the actual settlement happens a month later, like on a wire or an ETF. ETF.
Exactly. So on a blockchain, we usually say the trade is the settlement. It's right. That is actually what happens. So that's the thing that we look into, and I'm super excited just to see we've already seen some of what's going to happen. Just take a look at DeFi, take a look at these projects, and then just transliterate them and use fiat, use the sort of the constructs that people all know, and then you lower the barriers, you sort of abstract away a lot of these complexities, and I think this is an unstoppable movement.
Yeah, you're right. Your infrastructure and the infrastructure. I love infrastructure plays like Twilio and Stripe, and look how big Stripe has gotten. And look how much room it still has to go. It's hard to even imagine. Emmett, what's going through your mind, my friend?
I think, as you say, infrastructure plays a very cool, and as you described it, gives a kind of linking the mainstream economy to blockchain and decentralized finances is a very interesting position to take. Obviously, with kind of the regulatory approval that you've managed to achieve and the work done so far, it sounds very impressive. I'm curious to understand when you look forward into many users, partners, millions of transactions, these various use cases. how do you get from today to that state of the world?
Yeah, that's a great question. I mean, it's all about scaling, right? And it's all about getting the network effect and how do you achieve that. So our way, our sort of go-to-market strategy, if you will, is to go through the partners. We are both Ethereum or sort of Consensus, which is one of the main players in the Ethereum network, and Algorand, which is a new blockchain, really interesting blockchain. Both of these projects are investors in Monerium. So we are using that sort of connection to reach a lot of the projects. We have an inbound funnel of the partners that just we don't have to sell them. Basically, when they know of us, they say, wow, we've been waiting for someone like you for 2 years. So, well, we started 2 years ago. It was a long journey getting the regulatory approval. So they completely understand the value that we're bringing. So it's just, I think it's about being early, partnering with the right partners, innovating, and then at the end of the day, it's about execution, like Stripe. I mean, they had multiple precursors to them, but they just constantly delivered the best product. And that's what we want to do. We want to just consistently simplify things.
Yeah, I was about, you took that was the word that was like jumping out of my mouth. Was they, to me, the thing they did best, and what made them a success in that space was their masterful way of refining it down.
Yeah. So we are mindful of that, and we are constantly trying to simplify things for our partners and users. It's a tricky combination, and you have to have sort of the broad team. And I think fortunately that we have it, because you have to be able to simultaneously speak to regulators, speak to, it's about onboarding, it's KYC, it's AML, it's all that. And then you have sort of the tech part of it as well, where you have to be innovative and front of the curve. And I think we do have that on our team as well. So that's sort of what I would say was our competitive advantage at this stage, is being early, understanding the needs of the community, and then thinking ahead. I mean, like we've been doing the grunt work for the past years, it's slowly becoming obvious that, if you want this industry not to be relegated to the sides, but to become mainstream, it's going to be regulated. You have to fit it into the right pieces. And we just started that process a long time ago.
I really like this. Emmett, I want to see you. Can you say something so I can see your face on the camera?
Yeah, I'm still here.
Going back to when I asked you what you look for, and based on what you described, this seems to fit pretty well into that. Am I wrong?
No, very much so. This is an extremely difficult thing to pull off. I think, as said, the need for that bridge between mainstream and decentralized finance is there. That's a position to take. I think, timing is far better now than it has been to kind of take that position. I guess there are, to dig in and understand from a regulatory, from a partner, from a user perspective, whether things are still early, how long that's going to take. It sounds very promising from your side, but no, it's very cool.
Great.
I get I could be wrong, but I think he wants to have a follow-up meeting with you. Am I wrong, Emmett?
I think you preempt well, Tyler.
I like it too. I'm gonna have a follow-up with you as well. Of the four, Emmett, rank. Give me your favorite of the four. Let's just do it that way.
And it's not because Gisli is still okay.
Here. Gisli automatically is getting the follow-on meeting. Gisli aside.
No, but I think this is very interesting from a positional sense. I think Socios seem interesting given the traction there with the various clubs. I think it's probably by no mean feat to sell to that many large clubs, which are actually, $1 billion kind of enterprises in actual fact. If you can take a position there to engage a large part of the fan base and it's a very captive audience, then you have a pretty good model to work with. So I think there's definitely something there as well.
Yeah, and he didn't start at the bottom either. He started at the top, which is quite a thing.
Exactly, and I guess that's the way to go, really. But he managed to pull it off.
Yeah, it'll be interesting to see what other things that can grow into, as technologies often do, right? Like, yeah, I agree. I think we have a similar sense for this. But to be continued, and we'll see where this goes. But fantastic presentation from a hotel room in wherever that fishing boat is.
Yeah, exactly. No, thank you guys. Just would love to take this further if there's interest. I mean, I think this is all about sharing the sort of the same ideals, the vision, and just generally happy to be talking to you guys, and yeah, let's see what comes out of this.
Yeah, I think you might have a winner, or at least a bright future. So thank you for joining us. I'm gonna just share a few more slides about an announcement. Actually, let's see, where is it? My deck. Here we go. So that was Mobilio. Go through the slides here. Announcements. There it is. Oh, one too far. So this is for Antler. Compete to turn your idea into a company with prizes, including a fast-track application to join Antler, a full-day branding workshop, and legal advice worth $50K, 3-month office at Norwin Foundation, coaching from my friends Natalia Brzezinski, Hjalmar Winblad, Indra Sharma. And there's the URL there, restartthefuture.com/idea competition. And Antler's a really highly recommended program. I can recommend it without reservation. And if you need any help, I'm happy to. And then, let's see. That's it. So again, a huge thank to our partners from EY, EQT, 3Drops, Capole, Danske Bank, NASDAQ, Visa, Hunt Club, and Vigna. But most importantly, thank you to our guests and speakers today, Emmett and Bill from Abra, and all of the really, I was actually quite impressed with these 4 startups in general. How about you, Emmett?
Very much so. I think, the crypto space is not an area we look at too closely, given we're rather Sweden Nordic focused, and I think actually Sweden's surprisingly underrepresented when it comes to kind of crypto companies, despite being very strong in fintech and adjacent areas. But so very cool to meet with these guys, and impressive what they're doing, and all the different use cases that continue to arise around blockchain and crypto.
Impressive amount of creativity starting to happen.
Very much so. And just I have one announcement from our side, if I may, just on in terms of addition to our team.
That's right.
So we are looking to recruit a new analyst to the team. We're a core of 6 at the moment. We'd love to add another ambitious 7th person. So wide variety of backgrounds, very welcome.
You just added one, an American, right?
We did. We added Hannah in August or September, and now we'll add one more. So so people can reach out to me via email, emmett@j12ventures.com, or check out our LinkedIn, where I think you'll find it posted.
Very cool. You're growing yourselves.
We're trying, yeah.
Yeah, cool. Thanks for joining, and thanks everybody. We will see you next time. Cheers.